Final accounts, problem and solution along with posting of adjustment and closing entries. Dear students, today let us learn about how to post the adjustment and closing entries passed in the previous lecture in the final accounts, the trading and profit and loss account and balance sheet by way of an illustration and its solution. Illustration. There is a trial balance on the right side. It has a debit and credit columns. All the balances extracted from the ledgers are brought here and put it in the form of trial balance. On the debit side, we have expenses and assets. On the credit side, we have liabilities and capital. So, the illustration is, after passing the necessary closing and adjusting entries, prepare trading and profit and loss account for the year and the balance sheet as at 31st March 2021 from the following trial balance of a manufacturer. And the adjustments to be made are: write depreciation of plant and machinery at 5%, of loose tools 15%, and furniture at 5%. The stock on hand on 31st March 2021 amounted to Rs 60,000. Provide 2.5% for discount on sundry debtors and 5% for doubtful debts. Rs 1,500 were due for wages and Rs 450 for salaries for the month of March 2021. The last bill of Rs 400 for taxes was for the half year ending 30th June 2021. Note: in the last lecture we have passed the adjustment and closing entries as per the illustration. Normally, each journal entry has debits and credits as per the system of double entry bookkeeping. We cannot post them to the ledger accounts at this stage as the ledgers have already been closed and the balance is extracted to the trial balance. After passing the entries, we need to give two effects of each journal entry. So now we need to post them for the first effect directly in the trading account or in the profit and loss account, and the second effect in the balance sheet. Let us post all the adjustment and closing entries one by one and discuss how they are affected in the items in the trading account and profit and loss account and balance sheet. Adjustment 1. Write depreciation of plant and machinery at 5%, of loose tools at 15%, and furniture at 5%. We need to charge depreciation on plant and machinery, loose tools, and furniture at the specific rates given in the adjustment. So, on plant and machinery, it is 5%. So, plant and machinery, cost of the plant and machinery is 40,000, and 5% of it comes to 2,000 rupees. And loose tools, the cost of the loose tools is 3,000. The depreciation to be made is 15%. 15% of 3,000 comes to 450 rupees. And furniture at 5%. Cost of the furniture is 1,200. So 5% of 1,200 comes to 60 rupees. So in the profit and loss account, on the debit side, to depreciation, plant and machinery 2,000, depreciation furniture and fixtures 60 rupees, loose tools 450 rupees. Total comes to 2,510. And the second effect in the balance sheet, against furniture and fittings cost 1,200 less depreciation 5% 60. The balance 1,140 comes in the outer column. Similarly, loose tools cost 3,000 less depreciation 15% 450. The net amount 2,550 in the outer column. Plant and machinery cost 40,000 and the depreciation 5%, it comes to 2,000 rupees. Net 38,000 in the outer column. Adjust number 2. Provide 5% doubtful debts on sundry debtors. Cost of sundry debtors is 45,000. 5% of 45,000 comes to 2,250. So in the profit and loss account on the debit side, to reserve for doubtful debts 2,250 we have to show. And then on the balance sheet asset side, sundry debtors cost 45,000 less reserve for doubtful debts 5% 2,250. The net in comes to 42,750. We will put this still in the inner column as we need to provide further reserve for discounts in the next adjustment. Adjust number 3. Provide 2.5% discount on sundry debtors. Now, the balance in sundry debtors account after providing reserve for doubtful debts is 42,750. So, on 42,750, we need to provide 2.5% discount on sundry debtors. So, it comes in the profit and loss account debit side. To discount and allowances in the trial balance 1,500 is already there, and then we have to add a discounts on debtors for this year 1068.75. Total 2,568.75 in the outer column. in the profit and loss account debit side. In the balance sheet again, in the net balance after providing reserve for doubtful debts is 42,750 less reserve for discounts 1068.75. The net amount 41,681.25 in the outer column in the asset side in the balance sheet. Fourth adjustment. Rupees 1,500 were due for wages and rupees 450 for salaries for the month of March 2021. Outstanding wages adjustment will appear in the trading account. Outstanding salaries adjustment will appear in the profit and loss account. So let us take the adjustment of wages 1,500 were due for not paid. So on the debit side the trading account, two wages 20,000 as per trail balance and add outstanding wages 1,500. Total 21,500 in the outer column. In the profit and loss account, two salaries 5,000 as per trail balance and add outstanding salaries 450. Total comes to 5,450 in the outer column on the debit side of the profit and loss account. And in the balance sheet, these are outstanding salaries and wages. So this is a liability. So we will put in the liabilities side. On open accounts, already 40,000 liability is there, and we have to add outstanding wages and salaries 1,950, 1,500 plus 450, 1,950. Total comes to 45,750 including bills payable 3,800. Fifth adjustment. The last bill of 400 rupees for taxes was for the half year ending 30th June 2021. We are making the accounts as on 31st March 2021. Half year means for January to June 6 months. So January to February, March 3 months is only belong to current year. So half of 400 rupees, 200 rupees is the current year and 200 is the advance tax paid. So we have to record in the profit and loss account rent, rates and taxes 2,800 from the trial balance and less prepaid 200. We have to deduct this from the amount and then put the net amount 2,600 in the outer column. We have to record it on the asset side as expenses prepaid 200 rupees. Closing entry 1. Transfer all expenses relating to trading account, that is stock in trade, materials purchased, returns inwards, wages, coal and coke, carriage inwards, oil, grease and waste, gas and water. On the debit side of the trading account, we have posted all these entries from the trial balance. Stock in trade opening stock 40,000, to materials purchased 51,000. So less returns 2650, net 46,350, to wages 20,000. Add outstanding as per the adjustments we have already recorded 1,500, 21,500, to coal and coke 5,000, to carriage outwards 1,000, to oil, grease and water 600, to gas and water 200. Closing entry number 2. Transfer all incomes relating to trading account, that is sales and return outwards. On the credit side, the trading account by sales 1,15,000 less returns 2,000. The net comes to 1,13,000 in the outer column of the trading credit side of the trading account. Closing entry 3. Transfer the closing stock at the end of the year to trading account. So in the trading account on the credit side by stock in trade closing stock 60,000 and on the asset side closing stock 60,000. Closing entry number 4. Transfer all expenses relating to business to profit and loss account such as salaries, rent, rates and taxes, repairs, replacements, general expenses, carriage outwards, advertisements, printing and stationery, discounts allowed, bad debts and depreciation. On the debit side of the profit and loss account, 2 salaries, 2 rent and taxes, 2 repairs and adjust replacement, general expenses, carriage outwards, advertisement, printing and stationery, discounts and allowances and bad debts. All these things are extracted from the trial balance and we have effected already the adjustments. Adjustment number 5. Transfer the net profit to capital account after arriving at the net profit after preparing the profit and loss account. So when we prepared the trading account, we got the gross profit and this gross profit is transferred to the credit of profit and loss account, and after recording all the expenses and adjustments, we have a net profit of 35,721.25. We need to transfer this to capital account. And then on the liability side, we have capital account balance as a 1st April 2020 2,03,000. Add profits during there 35,721.25 less drawings from the trial balance 15,000 in the outer column 2,23,721.25. Finally, when all the adjustment entries and closing entries are posted, we will get the trading account and profit and loss account like this. When the balance sheet is matching, this is how we will post the adjustment and closing entries and pass in the balance sheet and trading account, profit and loss account, and solve the illustration for preparing the final accounts. In the next lecture, we will discuss about capital expenditure and revenue expenditure.